Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 21st, 2024, and we're diving into Vestis' latest earnings report for the fourth quarter and full fiscal year 2024. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Vestis, a leader in the B2B uniform and workplace supplies sector, has just released its earnings, and there's a lot to unpack, from revenue figures to strategic initiatives for the upcoming year.
Revenue and profitability overview. Let's start with the top line. Vestis reported a revenue of $2.8 billion for fiscal year 2024, which is a slight decrease from last year. John, can you elaborate on their profitability metrics?
Absolutely. Despite the slight dip in revenue, Vestis managed to achieve an operating income of $158 million, which is 5.6% of their revenue. Their Adjusted EBITDA came in at $353 million, representing 12.6% of revenue. However, net income saw a significant drop to $21 million, down from $213 million the previous year, largely due to increased costs and lower volumes.
Cash flow and debt management. Vestis has shown strong cash flow performance. Can you tell us more about their cash flow and debt management?
Vestis reported an impressive operating cash flow of $472 million, up 83.6% year over year. Their free cash flow also increased to $165 million. On the debt side, they reduced their net debt by $319 million, bringing it down to $1.3 billion, and improved their net leverage ratio to 3.62x from 3.95x last year. This indicates a strong focus on deleveraging and financial stability.
EPS forecast and actual performance. Analysts had forecasted an EPS of 13 cents for Vestis, but the actual adjusted EPS came in at 11 cents. What does this mean for the company?
This EPS miss of 2 cents, despite being minor, reflects the challenges Vestis faced in maintaining profitability amidst rising costs and competitive pressures. With only 3 analysts covering the stock, the forecast was narrowly missed, which might affect investor sentiment in the short term.
Strategic initiatives and future outlook. Looking ahead, what strategic initiatives is Vestis focusing on, and what guidance have they provided for fiscal 2025?
Vestis is prioritizing disciplined capital allocation with a focus on deleveraging. They have entered into a $250 million accounts receivable securitization facility to enhance liquidity. For fiscal 2025, they expect revenue between $2.8 billion and $2.83 billion, and Adjusted EBITDA between $345 million and $360 million. Additionally, they declared a quarterly dividend of 3.5 cents per share, indicating confidence in their cash flow generation.
Key takeaways. To wrap up, Vestis has shown resilience in a challenging environment with strong cash flow and debt management despite missing EPS expectations. John, any final thoughts on their investment prospects?
Vestis is well positioned for growth, with strategic initiatives in place and a focus on operational efficiencies. While the EPS miss is a concern, their strong cash flow and debt reduction efforts are positive indicators for long-term investors.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Vestis' performance in the comments below.